Okay, so I think we're set.
Yeah, so hey, so let's get started here. We wanted to you know, put this conversation together because the whole crypto universe was kind of a geek's heaven for since it really began. And then about 2 years ago, there was a big blow up because of some hacking, and then it kind of went back under the covers again. And about 6 months ago, everything started to rock again, and Phil's been trading the crypto since 2011, and he has been offering, kind of crypto buy, sell, lend, new coins in the binary room. And once this thing started to take off, we decided to, morph the binary room, the advanced binary room, into a binary and a crypto room, because just the amount of money that people can make trading this. And then as he dragged me kicking and screaming into the crypto world, my background's more on the equity side, futures, options, things of that nature. And Phil kind of is more naturally involved with Bitcoin. He was actually a Bitcoin miner when he first started. That He got me started on this, and I started doing some really deep homework on the space. And in the beginning, I was kind of reluctant to really get involved because I thought maybe it was just going to be a bubble. It's just a coin. People are going to get in, they're going to get burned, they're going to get hacked. And then as I really started to understand what's really behind Bitcoin and then Ethereum and then all the other coins, you realize there's just so much more there. And it is not only going to be a speculation opportunity for us, but it's going to become a complete ecosystem. And so we set about putting together some training classes because we're just starting getting inundated with questions on how do I trade this, what should I trade, what shouldn't I trade, how do you really make money with this, is this really a bubble? And so Phil and I spent about, I don't know, what do you think, Phil, about 90 days putting together a bunch of classes. And then we started
Yeah.
we started to talk about this more and more. So that's what kind of today is about, kind of letting you guys know what we're thinking, what we're doing, and then also just talking about the crypto world and really how you can participate in that. And then Phil, I'll just throw it open to you if you have any kind of opening comments, and then we can kind of go back and forth and then answer questions from the chat.
Yeah, so I mean, basically, where I started was in, like Bob said, back in 2011. I first came across Bitcoin. Always kind of been a tech guy, so I was naturally drawn to it. And basically, what I ended up doing was I basically read it, and just in my mind, click. It just I think I was mining that night on my graphics card. At that point, it was 2 years 2 years into it. So essentially, the ecosystem had, was established to a point. You couldn't mine it anymore on your computer. You used to be able, when it first started out, and I'm talking like real early, you could mine it on your CPU, but then that quickly, you couldn't do that anymore because the difficulty raised because the hash power on the network came in. So as the hash power grows on the network, you need more power. So what they figured out was they could use graphics cards, and so that's kind of the time frame that I got into it. But that was still back in 2011, still way, way, way early into it. But to me, it made a lot of sense. I thought personally it was revolutionary because you basically had this idea of a blockchain, like I always joke like it's dropped off from outer space, that idea or that tech. But it was so, to me, it just seemed so revolutionary that I had to be part of that. So what I did was I just went ahead and started mining, and I said, let's see where this goes. And over time, I would put out like a Google alert and just get, end of the day, get an email on all the different articles that were out there on the internet. And you might back then might get 1 or 2 hits on a Google alert, and then it just started to just exponentially grow. And then it was like there was hundreds of hits of articles out there. So that's when I kind of, to me, it signaled that this thing was catching on and it's probably going to go somewhere. And then as the ecosystem grew, and then you had payment processors and things like that attached to it, I just, it got to that crossed that threshold where it was like, okay, you're not putting the crypto genie back in the bottle. This thing's here to stay. And now you fast forward to today where, and it's still the early adoption phase because, you're feasibly able to still get one Bitcoin. We could talk about that for a little bit. And that, there's only so many that's going to be produced, like 21 million. And only 1,700 are produced per day. That's the pacing algorithm built into the Bitcoin code. So whatever the power is on the network that's generating the hash that's going to create Bitcoins, it paces the network so that 1,700 are produced per day. So you have this supply problem. It's very finite, and you're having the world that's just now starting to wake up to cryptocurrencies, right? It's been reported that 1%, I think, it took about 8 years, so from 2009 to now, to really get to penetrate about 1% of the global consciousness surrounding crypto. Because of the exponential nature of growth, that's estimated to be eight months or so, it'll go to 2%, and then like 8 weeks to go to 3%. Okay, but look at where we've gone now. So let's say we crossed the 1% threshold. We're at Bitcoin $4,200, let's say, round off. And it took 8 years to get to that. Now you're talking about doubling the amount of exposure in 8 months. So as you can see, there's like a lot of explosive price potential here. Now, if you take everything that Bitcoin is, you take the ecosystem, you take the supply, you take the adoption rate, and you put that all together and you run some models, there's pricing models that have this thing going to like six figures, like $100,000. Some have that out at 5 years, some have that out at 3 years, some that have that out at 2 years. And as time progresses, we'll know more because we'll see kind of like what the price trajectory is. But I think we have to look at price. The price started jumping up, a few months ago, let's say March, April. And I think that trajectory that we have now that we're on, I think that's going to continue and accelerate. So as far as getting into Bitcoin, this is going to be a time where, like I said, you'll be able to get one whole Bitcoin, but it won't be the case down the line, and that window's closing really fast. Then to put that into perspective, there's not enough Bitcoin to be acquired by all the millionaires on Earth, right? There's millions of millionaires on Earth, but mathematically, because of the limited supply, not every one of those guys would be able to have one whole Bitcoin. So that's pretty wild if you think about it, because if you're a millionaire, you're pretty diversified, and at some point you're going to be diversified in crypto, but there's not enough to go around. So these crazy valuations of like six figures, $100,000 and stuff like that for Bitcoin, I think is completely realistic. It's just a unique asset. There's nothing really like it. You can't compare it to anything else. You can't say that it's in a bubble. We have periods of episodic hyperinflation, which has been the way Bitcoin has grown from inception, from when it went from like 1 penny to 48 cents and then came back down. And you have all these periods of spikes. Now what will happen over time is, as the adoption curve takes place, you're going to have more saturation in the market, and so there's going to be more price stability. So these crazy ups and downs will diminish over time. I think right now you can realistically expect 30% type pullbacks, then 20, then 15, then 10, and then it'll start to just get a little bit more consistent. So big picture, that's kind of a real quick look at where we are in time in relation to Bitcoin and what's going on.
And let me jump in if I could, fill in.
Yeah.
And there was a question, and I think at times it too. Somebody asked, what is mining? I think what you're going to find is there's going to be a lot of analogies from the past that are brought forward to kind of help people bridge their understanding. And so the mining concept is when you first went to metal coins, you had to mine the metal to get the coins, and that in itself created a scarcity because there was an expense in actually creating the coin in the first place, and typically very wealthy people or governments controlled those mines, and so they could keep the supply, just like what Bitcoin is doing. They're kind of just parceling out the supply over time. Well, they built an algorithm that you have to work for to create the coin. Just because you're a miner on Bitcoin like Phil was doesn't necessarily mean that he actually gets to produce a coin. He has to compete on price to be allowed to actually produce the coin, number one, and number two, he has to run the algorithm to create the coin, and that takes time and money and electricity. So there's an inherent cost to the creating any of these coins, but Bitcoin will just use that kind of as the euphemism for today. So, so when people say, well, just like the Federal Reserve, well, you can just create out of thin air, you really can't. And as they built the algorithm, and Phil, you correct me if I'm wrong, the closer they get to the 21 million, the harder the algorithm is to crack, or the encryption, I should say, not the algorithm, and the more money it's going to cost to create the coin. So over time, if the price of Bitcoin drops below the cost of producing the Bitcoin, people probably aren't going to produce it at a loss. So it's what Phil says. So over time, it's going to support the price. So that's kind of some of the things that they do with the coin. So anyway, I jumped in on that, Phil. And the other thing too is I know a lot of people say, hey, just buy this coin and hold on. You can do that, but human nature tells me, trading for 25 years here, that people don't hold on. And Phil's probably one of the few people that has just a rock hard, set in stone. I'm not gonna sell my Bitcoins, but if this Bitcoin went tomorrow from 4,200 to 15,000, and then all of a sudden dropped to 8,000, I guarantee you people will panic out of those coins. And so one of the things that we do as part of the service is we'll give you those buy-sell areas, or hey, it reached the top of the channel, if you wanted to ratio into some other coins, or if you wanted to take something off the top, or vice versa, is hey, it hit a bottom of our buy area, I think you should add. And I'll give you an example. Just 3 weeks ago, the Twitterverse was awash. It is a bubble. It is going to burst. Ethereum's going to 50. Bitcoin's going to 1,000. You guys are all a bunch of idiots. And Phil's looking at his charts and saying, no, we just hit the top of the channel. This thing's going to go to here. It's going to do its forking thing that it needed to do to make it more amenable for growth in the future. And this thing's going to double. And because he had Phil as a coach, all of us hung in and we all doubled, versus all these people that bailed out and now are panicking. So that's one of the things that we kind of do with the service, is because we have an understanding, because we trade for a living, we have an understanding that the Bitcoin's not just going to keep going straight up. It's going to have these big pull-ups, and it's going to have these big pull-downs, and it's a way for you to build your portfolio over time. So Phil, do you want to add anything to that?
Yeah, I'm going maybe back to what you mentioned on the mining thing, just to touch on that really quickly. Bob's right, it does actually start winding down production as we get closer to that 21 million threshold. And the reason for that was because when Satoshi Nakamoto, and that could be a moniker for a group of people, the white paper for Bitcoin looks like it was written by one person, but there could have been a group behind it because it is pretty complex code. But their thought, or his thought, was that as we get coin out into the ecosystem, we don't want to flood the ecosystem with coin, because they thought there'd be fractions, you would fractionalize it as you went. So essentially, basically, as we approach that threshold, half of the amount of coins that get produced per day the amount that gets produced per day will halve. So when you used to mine, you used to get a reward of what they would call a block reward, because when you mine a block, what they're doing is they're confirming the transaction on the blockchain network, the Bitcoin network, to say that that Bob sent Phil a Bitcoin, and Bob had the right to send Phil a Bitcoin because he owned that Bitcoin. And so you can't refute that. That's why there's no counterfeiting in Bitcoin. You can't hack it because of the nature of the architecture and the cryptography that's used. So that's why this thing's going places. But to get back to the supply issue, as time goes on, it halves. So it used to get a 100 block reward, then it was a 50 block reward, and then it was a 25 block reward. Now we're in a 12.5 Bitcoin block reward, and that'll continue to have until we are all mined out. So when we talk about supply being an issue, it's going to have more price or more impact on price as time goes on. I think the next halving event happens in 2020 at the current rate of production. So, and you can see if you go back to last year's chart, I think the halving event happened around June or July, I believe. And if you go back to those price charts, and I was telling everybody back then, hey, this is, get Bitcoin now at these prices, which I think was around $600, because I said what's going to happen is the supply is halving, the rate of production is halving, and that's going to put pressure on price. So you can think about it this way: when miners, these big industrial mining operations, they sell Bitcoin for a profit. They mine for a profit, so that means they're constantly turning over Bitcoin that they mine onto the exchanges that's where you go to buy, right? So they're constantly selling it, so that churn rate slows down. So now you got half the amount of coins coming out in the network, and then another half of that as time progresses. So it has this built-in mechanism of bullish or positive bias on the supply and demand mechanism of Bitcoin, just from that aspect of it being the production being throttled, I guess you could say. And that's just built into the code because they wanted to they wanted to control the supply and throttle it, which was I think they kind of underestimated what the demand was going to be. Nobody really knew where this was going to go. So, but I think that's why you just, the supply and demand issue of this thing is huge. I don't think people can really wrap their heads around what that's going to do to price. It's really, I don't see it. I don't see any other outcome other than price is just going to go parabolic, and it's just going to go up extremely quickly in the next couple of years. So just wanted to touch on that mining aspect of it.
Yeah, and I don't want this to be a kind of a Bitcoin talk, because Bitcoin is actually just a part of what people are calling really Internet 3.0, and that's what really fired me up about the cryptocurrencies. And in fact, Bitcoin I was kind of blasé on. I agree with Phil; you can make a lot of money with it, and that's all great all the time. But when I read about Ethereum and what they were doing in terms of being able to create basically a platform so that other coins can be created, and basically created basically an infrastructure tool that is going to allow so many different kinds of businesses to come in, and basically one of the things about the cryptocurrency, they're going to have to come up with a new name at some point, because it's really more than just encrypted currencies. It's really a whole methodology around eliminating middlemen inside of a transaction. And I'll give you an example. So if I wanted to wire you money, I could go to the bank, or I could sit at my desk and fill out a form, or if I had one pre-filled out, I got to go authorize it. And it's 24 hours before that money gets moved. And in some cases, one of my businesses, we move a lot of money around. And even though that money is considered good and collected funds, sometimes they still put holds on the funds, because there's ways in which those funds can get pulled in the banking system. In the crypto environment, if I sent Phil money via a Bitcoin or an Ethereum coin or a Litecoin, or you name the coin, that transaction gets confirmed, and it's sitting in his wallet and it's out of my wallet. And the nice thing about that is the whole ecosystem of the cryptocurrency knew that transaction happened. They don't know who I am, they don't know who Phil is, but they all know that transaction happened and it was a good transaction. And now Phil has those assets on his books and it's out of my books. And that's just one instance of what's really happening in this environment. So you have a lot of you guys are traders that are on the site right now, so you can you know the 3-day rule, right? They lock your money up because the paper certificate doesn't follow the money, and in those 3 days somebody can steal everything or go broke on them or whatever. Well, there's a coin out there called Veritasium that is now being implemented by some of the smaller stock exchanges around the world, and that's going to create instantaneous transactions that are confirmed, so there's going to be no need to delay. And the thing about the coins is this, where I talked about it's more than a speculation event. Those coin owners that own the coins inside that ecosystem are going to pick up transaction revenue, or in some cases, you're talking another coin called Populus, where you actually going to do peer-to-peer lending. So you just can sit back and just imagine a future where somebody is between you and a transaction, or if there's time between you and a transaction, and somebody is going to create an encrypted algorithm on a blockchain that's going to try to make more efficient use of your time, and also move people out of the transaction that are basically stealing from you because they have a centralized database, or they have some way of verifying a transaction. You want to add anything to that, Phil?
Yeah, yeah, like you said, it's more than just Bitcoin, and the course goes over, what's kind of what your investment strategy could be as far as what's like core holdings and some of these alternative plays that are legit. We've researched them, and they're going places. But crypto really, I should say blockchain technology is going to take over just about everything, and it'll be in everything that you do, because what it's doing is it's creating an environment where you can't defraud a transaction, and it's going to be in everything. I mean, it'll even be in the Internet of Things, appliances and stuff like that. Autonomous vehicles, for example, that's a huge risk as far as getting hacked into, right? If you have an autonomous vehicle gets hacked into, I mean that's super dangerous. But if you are locking the security down with blockchain, you can't hack that. So let's just say the car can't receive, it's embedded that it can't receive an outside signal, and it's because of the blockchain processes that it authenticates that programming, you wouldn't be able to get into the car, for example. So when you apply a trustless system, and you say that you can apply that to anything and everything, and it just takes, now it's taking all the existing ways of doing things and making them instantly obsolete. For example, too, let's look at YouTube, right? And adpocalypse, right? So that's, what are, they can change the pricing structure or whatever, or even if you're, let's say you pay for advertising, or maybe you're one of the affiliate guys that you advertise for others, and you get rewarded for the amount of clicks that you generate. What this does is this now makes it so that you don't trust a third party for telling you how many clicks you generated, for example, or how many ad minutes your channel created, because it'll be self-auditing. You'll have a blockchain ledger telling you that, yeah, you had 1 million click-throughs or something like that last month. You're not relying on another third party. So it's stuff like that where it's really a game changer. So I think, YouTube's, Facebook's, stuff like that, they're in trouble because now they don't hold the keys to the kingdom as far as advertising and stuff like that goes. And this is just one sector I'm talking about. This applies to many different things, but when you start thinking and wrapping your head around how revolutionary this is going to be, decentralizing everything, and that's what this is all about, is decentralizing, even down to the currencies like Bitcoin, Litecoin, and as such. You're decentralizing the control of your currency. So you're not relying on government fiat, government paper money, right? So that just transcends everything about your whole way of life. Think about everything that you touch during the day, technology-wise, money-wise, whatever, and there's going to be a blockchain application for that. So what we do in like our service with the trade room, or the crypto room, and the course and stuff like that, is we're looking ahead and we're trying to find who's going to be the winners, right? Who's going to be the Amazon, who's going to be the Netflix, who's going to be the big players that come out of this period that we're in. Because I don't want to compare this to the dot-com boom, because this isn't, because the dot-com boom was a $6 trillion market, and if I was to make a bubble of 6 trillion, it'd be like this, and the cryptocurrency bubble is like it's like that, you know what I mean? It's like the $200 billion market compared to a $6 trillion market. So we're nowhere near a bubble. But that being said, we're in the phase of innovation. We're in the innovative phase. So so now's the time you're going to be able to get into some companies that are going to be monstrously large that, 10 years from now when this thing is fully matured, maybe in 10 years when everybody's talking about crypto, maybe there will be one final price push and there's going to be a big bubble. And that might be the time where it's like, okay, price might have topped out here. But during this next decade, those names are going to be the ones that we're looking at now. Those are going to be the ones that are going to be around for a long time. So that's the ones we're trying to position people to get into as far as our service and the courses that we have.
Yeah, and just to add to that, and thanks for mentioning that, Phil. Is that's the value add that we bring. I think between Phil's background and my background, I think we're pretty complete. I spent my entire executive career in mergers, acquisitions, and in strategic planning, and so I was paid to look around the corner, to see what was coming up, and that's what fascinated me most. I'm sitting there and saying, oh my gosh, this is untapped, literally untapped. And the thing is, all the fangs that you see out there, you can set Apple aside for a second, are all going to be devastated by this. It doesn't mean they're going to go out of business. It means they're going to lose a lot of pricing power. Amazon, I think, and that's why I've been pounding so hard on Amazon, is that the only reason why Amazon has a $500 billion market cap is because they think their cloud business is going to take them to the moon. And Microsoft and Google are in that space too, but the blockchain is going to come and it's just going to take all these guys right out, and it's going to decentralize everything across the entire world, and those guys are going to lose their pricing power. So what we're looking at is we're looking at those opportunities that are coming up, and we're doing the kind of the homework for people, and like I said, what we charge for the service and the courses is nothing compared to how much money you're going to make doing this. And I mean literally some of the stuff that Phil has uncovered is simply incredible, and in terms of percent gains that you'll gain from these things, because you got to realize there's probably 50 coins out there waiting to be released, and there's probably 50 more that are in the process of trying to raise money, and there's 700 to 800 of them out there, and 90% of these coins are not going to go anywhere, and we're looking for the ones that are going to make us all a lot of money, and so that's kind of what we're doing here. So going back to the whole concept of this, I'm going to just call it the Internet 3.0, is literally there's $200 trillion worth of assets worldwide, and I think the digital currencies are at $150 billion. It's nothing, and what it's going to do, it's going to be inflationary and deflationary at the same time. All the banks make all their money off of generating fiat into existence through credit. Well, you can't do that in the crypto space, because you can't create a fake coin. It just will not be accepted in the because of the blockchain and because of the shared ledger. So it's going to affect the banks tremendously, and then countries that have their fiat that are kind of unstable. When you see those countries start getting more and more unstable, you start seeing a pop in the currencies. And we see that because Phil follows the currency markets when he does his binary options. So you kind of get a twofer with Phil. He's watching the currency markets, so he's seeing any dislocation there. And at the same time, he's watching the crypto market. So, if you join the crypto binary room, you're going to get the best of both worlds there. And I'm watching the equity space, and there's going to be some tremendous winners on the equity side that are going to replace some of the old guard here. So it's just an incredible and exciting time, and this, like I said, this thing's just scratched the surface. We literally now have people that have wealth that haven't been interested in this, and I know personally a couple people that are really, really, really well connected and pretty savvy, and up until 2 or 3 weeks ago never touched it, and now are moving into it in a big way. And these people are the people that get out before bubbles. These aren't the people that get out, after a bubble has already broken. And and a lot of big money's coming into the space now too. John McAfee, he makes a tremendous defense for why this isn't a bubble, and this is the guy who basically is the founder of basically crypto in terms of software, in terms of defending against malware. He sees this, and his point is that the currencies not necessarily going to go up, the digital, but the fiat currencies are going to go down at the same time. So it's a little bit like gold and silver. It's gonna hold its value because it has scarcity, but at the same time it has ubiquity. And somebody coined a phrase. I wish I could claim it for myself, but he said, "Your cryptocurrencies are where you are. It's basically your currency in your mind." If I walked across the border from the United States to Canada, and all my fungible assets were sitting in Ethereum or Litecoin or Bitcoin, if I tried to cross the border with that as cash or gold or whatever, I would have to legally declare that I have that money. Well, if I walk across the border, I don't have to legally declare I have that money because it's still sitting in the United States. And once I cross the border, it's sitting in Canada. So the power of this thing is just gonna bedevil governments because it's really everywhere at once, and not every country is going to want to be, beholden to the Anglo central bank approach of controlling everything. Somebody's going to break away, and I don't know if most people really don't know this, but the Chinese are big, huge miners of Bitcoin. The Russians are totally behind Ethereum. They're not against Bitcoin, but they're totally behind Ethereum. So these people have vested interest to keep the Anglo banking system honest or from being too overarching. So there's going to be places for your digital currency to have safety against an overarching government that might be suffering from spending too much money and their currencies are being devalued. So I just kind of throw that out because that's what's really going to take this off. When one of these countries goes down or if there's a war, I guarantee you the first missile that hits South Korea, these digital currencies are going to just go through the roof because people are just going to hit the banks, move their money into digital, and be gone. And so, So I'm rambling. If you guys want to add anything, Phil, and if anybody has any questions, let me know.
I mean, that's a good point that you bring up because I think what we've seen, the markets right now, if you follow the markets or you're trading, the S&P 500, it's like a zombie, right? Just zombie walking uphill. Not really. This is probably the most unnatural looking market I've ever seen, and I've been trading for a couple of decades. So, but the days that we've had that are red, if you notice, you could probably go back and look and compare charts, but the cryptos don't move or they go up. So to me, what I've seen is like, if anything, there's a flight to safety dynamic that's been going on. I think that though, if we have any kind of market turmoil in the month of September, which for various reasons I think we will, I think when people see the dynamic of money going to crypto as a flight of safety, I think that's going to be a big game changer and a big part of the growth path with cryptos. I think people are going to just, because it's a decentralized thing. It's not it's geopolitically neutral, so it's not like you're taking if you want to buy currency, or if you want to short a country, you sell their currency, right? Or if you trust a country, you're going to buy their currency. If there's geopolitical instability everywhere, which there seems to be a lot of, put it in crypto, put it into Bitcoin, because that's neutral, and it's a very, very safe store of value. So I think that point that you touched on, Bob, I think was really important, because I think you're going to see a major dynamic here with that, with the flight of safety. During periods of market turmoil.
Yeah, there's a bunch of questions. So Jay asked if there's the SEC is getting involved. They can, but the SEC and the IRS have a problem on their hands because they want to tax and regulate this like it's a security, but it's really a coin because you can transact with buyer and seller with it. And if I went to to the currency exchange and I got $1 million from the currency exchange and I exchanged it for dollars to Canadian dollars, and then tomorrow the Canadian dollar dropped by 10% and I walked back over to the currency exchange, handed them back my American dollars and took my Canadian dollars back, and now I'm 10% richer, the IRS does not claim that 10% as gain. It was just, that was just a currency swap. And so they're really struggling with, and you're not using leverage or things. So this stuff's going to get tangled up into the courts. And I'm not saying that they can't make a case that it is or isn't. I'm just saying these things aren't very simple for these people. And because it's a coin, just because I bought a coin, just because my dollar can buy more doesn't mean that you could take some of it from me. It happens all the time. I used to travel to Europe, and in the early 90s, when the currencies would move around a lot, I would buy my ticket when the dollar was stronger, and then when it would start weakening, I would be grabbing the other currency ahead of time. So I didn't tell the IRS that, hey, I made $450 on that transaction. And I think those are the arguments that are going to be made, saying, hey, just because I'm buying and selling doesn't mean I'm speculating, even though that's in essence what it is. So people are going to make that argument, and there's going to be some countries that don't care. And somebody talked about convert it to money. Scott, you're bringing that up. Is that some people never will, and I think that's why some of these other coins have started to show up, like Litecoin, and there's another infrastructure play coming out that's going to be released next week called Dimcoin, where some people are just going to stay in the ecosystem, and they'll never move out of it, and so they'll never convert it into what we would call money. It will become money, and so it's just not there yet. So we kind of think in terms of, I got to convert this back into money. But like John McAfee was saying, he knows people that literally transact in Bitcoin and stay in Bitcoin, and there's going to be currencies that are going to be created in the digital realm that you're going to be able to go buy a pack of gum, buy a coffee. It's going to get that cheap. And the other thing too is, and Phil could tell you, when I buy and sell stocks, I'm paying pretty good fees. When I buy and sell my currencies, I'm paying hardly anything for it. So it's going to drive transaction costs down even further. So let's see. Yeah, and then Paul's talking about, the banks have a lot to lose. Yeah, I noticed the other day that Ben Bernanke is now going to head a symposium on actually these cryptocurrencies in October. I think, and Phil knows this more than I do, so Phil, you could jump in, but I think that they're going to try to front run and get people to use their national cryptocurrency. But I also think that's where they're going to go when they dump the dollar. You're going to wake up one day and you're going to say all your cash, like India did, all your cash is worthless in 30 days. You need to go ahead to the bank and convert it into the cryptos that we own. And they're going to try to trap people inside of that space. You got to be one step ahead of them and already have your fiat outside of their clutches.
Here's my take on the whole government shutdown and taxing and SEC and all that stuff. First of all, SEC regulations aren't a bad thing. I think that regulations to a certain degree are not bad because it gives legitimacy to what we're doing, to the coin. So them, and I think it protects people too, to be quite honest, because a lot of these ICOs that are coming out, these initial coin offerings that you might have heard that term, they're like IPOs, but they're based on, the crypto tokens. A lot of them are based on the Ethereum network tokens. So they'll create a project and they'll tokenize it. And there's legitimate uses for tokenizing a project or having tokens to use. Let's say you have something like Veritasium, right? That's going to be a financial engine without getting too deep into it. But you need the Veritasium tokens to use it, like a licensing fee or something like that. So there's a case where it's a legitimate use. But there are other ones that are just pretty much just scam coins. I mean, there's nothing really behind it, or there's just, all it is a white paper. There's just no substance, or the business model isn't really that great. But there's going to be people taking advantage of that, and because of the craze. And so that's, so the SEC stepping in, I think, is a good thing in that regard. The other thing about the banks is what you're seeing now is you're seeing countries they're moving toward legitimizing, let's just say Bitcoin for example. They're legitimizing Bitcoin and recognizing it as legal tender. This has happened in Japan. It's happened in India. It's going to start happening in other Asian countries. Russia has basically given the nod that it's going to happen in 2018 there. The Australians are really pushing for the central bank to back Bitcoin, believe it or not. So if there was a window of time where the banks might have thought, hey, we'll lose control if this crypto thing takes off, I think that's gone, because now what we're seeing is countries adopt it. Then if you want to go from the viewpoint of these other countries that aren't allies of the U.S., what are they going to want to do? They're going to want to usurp the dollar dominance, right? So they'll go into Bitcoin just from that angle. So I think now you've gotten to the point where governments have started to take positions that are pro crypto, and so once that happens, I don't think you're going to reverse course on that. You're just going to have governments that are going to have to just want to regulate it, and but it's like anything else. They tried to regulate the internet, and that didn't go very well. And you'll have waves. You'll have some bills that'll come up in Congress or whatever that'll bring up the internet censorship thing, and they're just going to get destroyed. People do not like being censored, and the same thing's going to happen, I believe, with crypto. So the whole government shutdown factor for me, I think, is a moot point, at least for now. You have to also understand the market cap, right? I mean, current global currencies is a multi-trillion-dollar market, and then we have cryptos that are like, a couple $100 billion. I mean, it's just so puny. So there's the other aspect of, it doesn't matter. Crypto isn't big enough for it to matter. And by the time, if you guys are getting into it now with us, by the time it does matter, we're done and gone. We've cashed out. We're good. We might have some core positions on running, but that would be a decade away at the earliest, would be my guess. So,
yeah, and Phil, and Russ asked a question about it being. He's worried about it being hacked. So, I'll let you. I have my answer on it, but I'll let you do it, because I think you've been thinking about it a lot more than I have and more deeply.
Okay, so that's one that comes up. There was a guy on CNBC that said, somebody's going to hack Bitcoin and it's going to crash. It's like, that's not, you don't hack a cryptographic blockchain. Okay, that's not something you hack. And the reason why it's not something you hack is because we're dealing with astronomically large numbers when it comes to the cryptographic key that they use. There's an analogy I'll use, and then and I think you'll see how ridiculous it is to really even bother worrying about whether this is going to get hacked. Imagine the Earth is like a quadrillion-sided dice, right? You got 8-sided dice or whatever, 16-sided dice, like if you ever played Dungeons and Dragons, right? Now imagine a dice the size of Earth with a kabillion sides. The chances of you hacking the blockchain would be the equivalent of rolling that dice and it coming up with the same number like 4 times in a row. Not going to happen. It's just not going to happen. I mean, it's just so astronomically improbable. It's just not going to happen. So that's how difficult it would be to hack it. And then somebody brought up, well, what about quantum computing? But listen, the blockchain code is upgradable. We just went through where they enabled SegWit, which we won't get into that. It's kind of a technical discussion, but SegWit will enable faster transactions on the Bitcoin network, and more transactions to be included in each block on the blockchain. But so if we do move into quantum computing, which is decades off anyway, the software would adapt, right? So all of those arguments about hacking or this and that, it's just a lot of hot air. It's not realistic. And you wouldn't have companies, big corporations getting into this space without their quants looking at the code and running the probabilities. Do you think there'd be hedge funds, large hedge funds like there are now, getting into this space without having their PhD guys that are quants looking at the code? They know it's not hackable. So
yeah, in addition to that is not only do you have to be able to hack the public key and the private key, remember that's what comes together. This is like, if you guys ever know any history, the British for 1,000 years used a thing called a tallywhacker, where they'd break it in half, and the buyer and seller each had half of it, and when they would come together to verify the transaction, it would have to match up, and that's what they did here. You know, you have a private key which identifies you, and then there's a public key that identifies the transaction. Those get stitched together, so you have two encryptions going. Number one, and then number two, I think they're down. Some cases it's seconds, but most cases within 10 minutes, the entire node of miners or participants in the ecosystem on the shared ledger reconciles the transaction. So if somebody came in and tried to hack it for themselves, not only would they have to steal the public key and the private key, they would literally have to hack every decentralized computer on the network and do it within the time period of the reconciliation. So it's absolutely it's a Mission Impossible. In fact, that would be a great movie for Mission Impossible to do. It would be, that's how hard it would be to hack these coins, and it's just getting more and more as computer power gets more and more powerful. The encryptions are just getting stronger and stronger. So, I think somebody answered the question about the coins. The coins are fractionalized, so you can buy or sell what you want. I mean, I'm fractionalizing when I'm buying and selling or trading coins all the time. So that's not a problem. It's just you just have a tally of what you still own versus what you paid out.
Yeah, So to estimating office, I see your question. You're basically, you can fractionalize this thing down to many thousandths of a decimal place. So if you sell, say Bitcoin's 4,000 for round number sakes. If you sell $100 of it, then you have 0.995 whatever Bitcoin left. Okay, so and over time, as I said, when the amount of Bitcoins becomes so scarce that you can't actually ever find just one whole Bitcoin, or if you did own one whole Bitcoin, that'd be like a huge deal because it'd be worth so much money. But you'll be dealing in fractions. The smallest fraction of a Bitcoin they call one Satoshi. So if we're getting down to that level where one Satoshi is worth something, then the one whole Bitcoin is worth probably in the six figures, maybe approaching $1 million. So, but yeah, you can fractionalize it. In fact, most people, if you watch the exchanges, if you go to an exchange like GDAX, for example, you can watch the order book. You'll see there's a lot of transactions that just transact in less than one Bitcoin size, maybe 0.5 or 0.25. But you can really fractionalize that down to like 8 to 10 decimal places.
Yeah. Oh, you're done here. I was engrossed in your conversation. Anybody have any other questions for us? Anything you want to pursue or try to understand a little bit more? I mean, we could talk for hours and hours on what's going to come up, but part of it too is if you're in the chat room with Phil and you go month to month, you can buy the course and you get a whole year's free. And not only do you get the crypto room, you get the binary room as part of it too. So you get a 2-for-1 or a 3-for-1 special. So we're going to do more of these. Phil and I are obsessed on this from two different standpoints, and I think there's going to be a lot of ways in which we're all going to make a lot of money in the crypto space. Companies to short, new coins to buy, new coins to avoid, and also new public companies that are coming up that we can invest in. So I'll look real quick to see if any more questions, and if not, we'll kind of cut it off.
Yeah, True Dog. What we're doing right now in the room is more about when there are opportunities, and they're more like swing positions, because there's a way to build up your portfolio, taking advantage of when other currencies are at a discount to Bitcoin. And so we track that stuff. Now we will come out with a signal like how we do on the binaries, and then we're also going to come out with an indicator that you can use on TradingView, much like what Bob created for doing the futures and stuff like that. And you can use that at your discretion, but it'll work really well because cryptos trade really nicely technically. Much more so than I think the futures market, which is a lot trickier. But Bob's signal on the DTMM is really good. It's able to get around that. But I think you'll see when we come up with a signal, it's going to be pretty deadly. I think because, like I said, they trade a lot more technically. So, but yeah, for right now, it's about position management. And like I said, we will have a signal that we will tweet out, like the binaries and also that indicator.
Yeah, so we're going to create the crypto money machine. We have to trade. We have to create it in another software platform. You know, you wish these guys would get their act together and get these cryptos on some of these other exchanges. But yeah, so we're working with a programmer to actually write some code. And I think the good news is that once we write this code, I think there's some auto trading possibilities involved in it. But it's going to take us a little bit of time to get it in and get it right. But in the meantime, Phil does give out signals. He gives them out in the chat room, and so because you're not trading these maniacally. Phil got me into Litecoin under 30, and the trade to get out is 68. So it's not like you're in and out of these things every 5 minutes. Now some people hyper trade these things, and you can scale the timing down to the 5 minutes if you want to do that. But I think at this point, as everybody's getting to understand it, swing trading this is just fine. You're going to make a lot of money doing it. One of the things that Phil didn't mention is that you can also lend your coins out to other people that want to speculate, because some of these other coins only take Bitcoin or Ethereum or Litecoin as collateral versus dollars. So there's other ways in which you can make money that Phil and his team in the crypto binary room would really help you guys gain a lot of success. So it's just amazing amount of information at a very, very low cost with people who care deeply about you making money.
Jay, to answer your question, yeah, when it comes to the crypto stuff, I will, if we say there's a couple different things. You have your core position, and you're gonna take opportunities to pick up something at a Bitcoin ratio, for example, that's going to be at a discount, and we're going to say, hey, this is a spot to get it, but it's going to be more like a swing type of entry, as opposed to the binaries that are, those are, the trade executes and we're in it for maybe an hour or two and then it's done. A little bit longer with these, because they're not binary, right? You're in a position, you'll have a profit target and a stop target in that type of entry. But a lot of these are just going to be swinging and then getting off the swing, and then swinging into something else and getting off the swing back into Bitcoin. So that's just so you understand, that's the dynamic. But yeah, we'll definitely be tweeting those out for sure.
Yeah. So the kind of the entry from fiat into the crypto world is Coinbase or a company called Kraken, and then inside of the crypto world, there's brokers that you could trade between coins like Poloniex and Bittrex. I think Phil recommends Bittrex, and I'm in Poloniex, but I also have a Bittrex account. I use Coinbase, but I also have a Kraken account, and they're easy to set up. So you can, depending on level of verification, how much money you can move from time to time. I'm reading some questions here. Yeah, so I trade on Poloniex. Phil trades on Bittrex, but there's other places coming up. There's certain coins only trade on certain places. So once you get into different coins, the crypto room guys will tell you, hey, you need to trade this coin in this environment, and at some point they're all going to be on one big exchange, and so it's just slowly will consolidate as more and more people trade these things. Let me see.
There's going to be, I think we're ultimately headed is decentralized exchanges, and you'll have what's nice about that, and maybe we can touch on that just a little bit here. So once you buy your coin, and most obvious place right now on the internet is Coinbase.com. I think they make it the easiest to take your money and turn it into a crypto of your choice. Well, they're limited to 3: Ethereum, Litecoin, and Bitcoin. You can open up to other exchanges like GDAX, Kraken, sign up, get your account information, your bank account information loaded up, and then you can wire or do an ACH transfer. It takes 4 or 5 days to do that method. Coinbase is nice because you can do a credit card transaction and instantly get your crypto. The other one too is cex.io. They are newer, but they will allow you to buy, I think, up to $1,000 on credit card. now. So those are two. The credit card transaction is the quickest way to get into binary, or I'm sorry, get into crypto. Um, as far as the exchanges go, yeah, Bittrex I like a lot. I think the user interface is good. They all have their strengths and weaknesses, so I think you have to basically look at, and some of them don't trade certain coins, some of them do. I think once you start getting into it, because it really doesn't take anything to open an account there. What takes time is if you want to get verified for larger transactions. So if you want to take out X amount of dollars per day over a certain threshold, then you have to get verified, and that's to meet U.S. regulations as far as know your customer rules and anti-money laundering rules. But but if you're not into like huge dollar amounts, you can open accounts everywhere. So you're probably going to have an account at Bittrex. You're going to have an account at Poloniex. You're going to have an account at Kraken. You're going to have an account if you're overseas at Bitfinex. And et cetera, et cetera. So just keep in mind you'll probably just open several accounts at these exchanges just so you can have an opportunity primarily to trade whatever's available, because unfortunately not everything's available on the exchanges. Now, being that that's the case, when you send your money to an exchange, you don't actually own the keys to the money anymore. What you own is the right to move it around, to trade it, or to say, hey, I want to bring it back home. So it's something. It's not like if a bank goes under, your FDIC insured, right, up to a certain point. With exchanges, if they go down, that's why it's very important. And we cover this in the course of which ones to go with because of their reliability, the size of them, how long they've been around, customer service, et cetera, et cetera. So if you go, so there has to be a good level of trust with the exchange that you're dealing with. So when you send your money there, you don't own the you don't.
I apologize in advance. My family's coming home, so enjoy the dogs.
So you don't own the coins, but you do control them, and they're yours. But you're giving it to a custodian, in other words. So if they go down, you can't say, well, those were my coins. Because the blockchain said no, the exchange had the keys, the private keys to those coins. So, there's no getting those coins back if something were to happen to the exchange. Now that happened to Mt. Gox, remember, and that was one of the biggest ones. Mt. Gox went down and everybody lost their coin. Bitfinex got hacked. Some of their wallets, so not their entire holdings, but a big chunk of their holdings got wiped. What they ended up doing there was they kind of socialized the loss. They took everybody had to take like a hit in their account, and they said, we're going to make you whole, but in the meantime we're going to give you this token that we made to represent what you're missing in Bitcoin. No, after a few months they made everybody whole. Poloniex actually got hacked too, I think back in 2014. A similar situation, but they made everybody whole. So when those types of exchanges, actually I like that. If an exchange has gone through that, I like it because they've now beefed up their security. That can't happen again. They show that they had the wherewithal to make everybody whole again, so they have their act together as far as finances and stuff like that. So I think the days of major hacks are going to be fewer and far between because of the methods they use now to cold store your money, your Bitcoins. So anyway, I just wanted you guys to understand that dynamic when you are dealing with an exchange.
Why do you explain cold storage?
Okay, so cold storage, and this applies to you as well, and I will get into that. Basically, what you want is ultimately the most secure way that you can have your coins is cold storage. If you have your Bitcoin, because Bitcoin is like the most commonly known crypto, and so there's been a lot of malware and stuff specifically designed to go after Bitcoin wallets on a PC, for example. So a lot of guys in the past had their Bitcoin wallet on their PC, and then all of a sudden some malware gets in there and was able to steal the wallet information. And so that's when they started encrypting the wallet information. But in the early days, you would get a malware or a keystroke logger and then figure out what your Bitcoin password was to get into your wallet. And so it was considered not really, really safe to have your Bitcoin on your PC. Or if you did, you wanted to encrypt the wallet. So you used to have to run through a lot of hoops to make that happen. Or, the other alternative was what they call cold storage. So cold storage means that you take the private key that unlocks your Bitcoin wallet and you take it offline. But to do that back in the day was kind of arduous. There was a lot of steps that you had to do. You had to have like an offline version of Linux that was designed to not be alive on the network in any capacity, no Wi-Fi, nothing. And then you had to use a USB key, and you'd have to take the USB key from that machine, sign a transaction. Like, say if I wanted to send Bob coin, I'd have to sign the transaction on the offline machine, take it over to my online machine, and then send the transaction off. So now what we have today is hardware wallets like this. This is a Trezor. So it's taking all that work out and turning it into a device that you can just plug into your PC. You can go to the Trezor wallet, so it's a web interface, but this holds all your private key information. And then what happens is, if I want to send Bob a Bitcoin, I'll generate the transaction on the web interface. I have to then verify it. This is a screen. I have to verify it, click the button to say, yeah, send it. It signs the transaction, and then in the web interface, it sends it out. So the whole process of handling your Bitcoin has gotten infinitely easier and infinitely more secure due to these hardware wallets. Now, this is Trezor. There's a couple different ones. Ledger's another popular one, and that's a must. You have to do that. You have to use a hardware wallet if you're going to have any kind of size in crypto. That's just not even a debate. If you don't do that, you're going to end up possibly deleting your wallet by accident, or get hacked or something, and somebody takes your wallet, finds out what the private keys are, and your money's gone. Somebody asked, well, what happens if the device gets ran over, you lose it or whatever? When you get those devices, when you first start up your wallet, they will make you do what's called a paper backup, and it's a series of words, a lot of words. And so if your Trezor gets dropped in the water, or you run over it, or it goes through the wash, basically what's going to happen is you'll be able to restore. You would order another wallet, another Trezor. It shows up. You're going to restore it, do the restore option. You're going to put in your paper backup seed, what they call the wallet seed, and that's going to restore the wallet. And because it's all stored in the blockchain, it's going to recognize that you had those Bitcoins or whatever cryptocurrency that you have. It's going to recognize that you were the owner of those, and then you're back in business. So it's just the way to go. You can't, if you're not using hardware wallets and you're in crypto, you're not doing your job. You need to be doing that.
Yeah, and so that's great, and that's great advice. And then somebody said about diversify over different exchanges. That works too. I'm over 2 different exchanges, and I want to just maybe end with talking strategy here a little bit and how I use the service within Trade Genius, because, like I said, I'm getting up to speed on trading the cryptos. I'm 4 months into it, versus Phil's 6 years, and although I kind of understand the model extremely well, Phil has a really, really integrated approach to doing this, which I love. First of all, I put money in every week, so I use it. I'm basically dripping in, so that I don't really want to be so focused on I put a whole bunch of money in, now I'm worried that my first trade's going to lose me money. I'm dripping in. I drip into Ethereum, and then I'm looking at Ethereum and Litecoin together and using the ratio trading, which basically you're looking at the values between Ethereum and Litecoin together, and when one is dominant over the other, you switch from Litecoin to Ethereum to Litecoin. And Phil's been pounding the table on, hey, Ethereum had a good move, but Litecoin's ready to light it up, pardon the pun. And so shifted over from Ethereum to Litecoin, and with money I had in Ethereum, and then boom, we had a 16% move. Now I'm waiting for that ratio to work itself out again, and then I'll move from Litecoin to Ethereum. I keep them in both, but I get heavier in one and heavier in the other. And those are the kind of things that we do in the room in terms of being able to teach you. And it works for me because I'm 18 hours a day looking at equities and futures. Phil's 18 hours a day looking at binaries and cryptos. And when I say 18 hours a day, that is no exaggeration. People that follow us in the room wonder when we sleep sometimes. And sometimes I live in the West Coast, Phil lives in Hawaii, and sometimes when we both should be sleeping, we're both up trading. So we really have a heart and a passion for this stuff, and we love it. And we have methodology that'll help you make money. And And so I think you'll love the crypto room if you like it. I think you'll make a lot of money, and I think what you pay to be part of it is nothing compared to what you're going to make from it. And so, if anybody any other questions, I'm going to go. Yeah, it's already recorded, so I think we'll just make it live for people to go back and check it out. Um, I don't know. Can anybody tell me? Because I have it off right now. What's the price of oil right now? Anybody can tell me real fast? Well,
40. Oh, hang on. 47.73.
okay, so big hurricanes coming. They're shutting the Gulf off right now, and this storm's going to push in, and it's going to stall, and it's maybe drifting. It's going to drift back out over the Gulf, and reform as a more powerful storm, and then may drift north and east. That means they're shutting down a lot of the Permian Basin in Texas, and people don't know where a lot of the oil is. It's all on the Gulf Coast, and it drifts over to Louisiana and into Alabama, Mississippi, and as this rainmaker could be up to 40 inches. I recommend it in a room for those who are trading with us to grab some oil. I bought some futures at 47.13. I added to it at 47.70, and some of the people that know a lot more than I do say if 47.70 holds, then this storm, if it sits for 4 or 5 days, we can see oil over 50. So it's going to rock, and not just oil. You can look at natural gas. And somebody rightly pointed out to me, said, "Hey Bob, look at gasoline, because they're not going to be able to refine it. It's going to go through the roof." So I'll probably sometime tonight I'll take a look at RBOB, and that's the gasoline futures, and I may throw a long on that as well. But this is one of the few times where weather could really, really, really help you guys make a lot of money. So I thought I'd throw it at you. Hopefully that you guys that were in the room bought some, and we'll take a look at it Monday, Tuesday, see where it goes. Yeah, I'm not surprised. This is kind of the quiet time for trading placeholder, so things will start lighting up about 11 o'clock tonight Pacific time. So anyway, hey, thanks so much. Thanks for being patient with us. We kind of know what to do next time in terms of trying to do a two-way with Skype and with YouTube. And if you have any other questions, let us know. And I really, really appreciate you guys listening to us, and I hope you got something out of it. Thanks.
Take care. Bye.